Breaking news is shaking the entire AI and stock market ecosystem today. Reports are circulating that Groq, one of the most talked about AI chip startups, may be heading toward a massive acquisition, valued around $20 billion, and the biggest question investors are asking right now is, simple but powerful: if Groq is sold, does NVIDIA stock explode next? To understand why this story matters so much, we need to unpack what Groq actually is, why it's so valuable, and how this potential deal could ripple across the entire AI semiconductor industry. Groq is not just another AI startup. It was founded by former Google engineers with a very specific goal: to build ultra-fast AI inference chips that outperform traditional GPUs in speed and efficiency for certain workloads. Unlike NVIDIA, which dominates both training and inference, Groq focused heavily on low-latency inference, meaning faster responses for AI models in real-world applications like chatbots, financial analysis, and enterprise AI tools. In an era where milliseconds matter, that specialization is incredibly valuable. Now here's where things get interesting. NVIDIA currently dominates the AI chip market with over 80% market share in data center GPUs. Its stock has already surged massively over the last year as AI demand exploded. But Wall Street is always forward-looking. Investors aren't just asking who's winning today. They're asking who could threaten NVIDIA tomorrow. Groq has often been mentioned as one of the few companies with technology that could potentially disrupt parts of NVIDIA's dominance, especially in inference. So if Groq is being acquired for a rumored $20 billion, that tells us two critical things. First, the buyer, whether it's a big tech company, a cloud giant, or even a strategic partner, clearly believes AI chip demand will continue growing aggressively for the next decade. You don't pay $20 billion unless you see enormous long-term value. Second, it signals that competition in AI hardware is intensifying, not slowing down. Paradoxically, this kind of competition can actually be bullish for NVIDIA stock in the short to medium term. Why? Because acquisitions like this validate the entire AI chip market. When investors see massive deals happening, it reinforces the narrative that AI infrastructure spending is still in its early innings. That narrative has been one of the biggest drivers behind NVIDIA's stock explosion so far. Another critical angle is this: if Groq is acquired by a company that already relies heavily on NVIDIA chips, it could reduce long-term dependency on NVIDIA, but it also highlights how difficult and expensive it is to challenge NVIDIA directly. Building competitive AI silicon from scratch takes years, billions of dollars, and world-class talent. NVIDIA's CUDA ecosystem, software dominance, and existing customer relationships remain massive, moats that no acquisition can instantly erase. From a stock market perspective, NVIDIA investors should be watching three key signals closely. First, who buys Groq? If it's a hyperscaler like Google, Amazon, or Microsoft, that suggests vertical integration is accelerating. Second, how NVIDIA responds strategically, whether through partnerships, internal innovation, or even future acquisitions of its own. And third, how enterprise and cloud spending trends evolve over the next 2 quarters. Because ultimately revenue growth matters more than headlines. It's also important to address expectations. NVIDIA stock has already priced in a lot of optimism. A Groq acquisition alone doesn't guarantee another immediate parabolic move. However, it strengthens the long-term AI infrastructure thesis that NVIDIA sits at the center of. In markets, perception matters almost as much as fundamentals. And right now, the perception is that AI is becoming as essential as electricity or the internet. For retail investors, this moment is not about chasing hype blindly. It's about understanding positioning. NVIDIA remains the backbone of AI compute today. Deals like a potential Groq sale don't weaken that reality. They emphasize how valuable AI hardware has become. Volatility may increase, but volatility often creates opportunity for disciplined investors. So the real question isn't just whether NVIDIA stock explodes next. And when you see startups commanding $20 billion valuations and legacy giants fighting for strategic control, it strongly suggests we are. If you want to stay ahead of these market-moving stories, understand the real drivers behind AI stocks, and see where smart money is positioning next, make sure you subscribe to the channel. This is where we break down the noise, focus on fundamentals, and help you think like a long-term investor, not a headline chaser.